This is When Real Estate Gets Real, hosted by Stephen Lee Thomas, a behind-the-scenes podcast for real estate operators navigating what actually happens after the first deal. When real investors, real pressure, and real leadership begin to shape the business. Let's get into it.
All right, welcome back to the show When Real Estate Gets Real. Today, my guest is William Liu. He is a multifamily syndicator, girl dad, and former CMO, Chief Marketing Officer, not medical officer, which some of you might be thinking. He corrected me on that a few minutes ago. So, William, thank you so much for joining me today on the show.
Thanks for having me, Stephen.
Hey, William, can you give us a little bit of a background about you and what you're doing today?
Yeah, I think, I'll kind of just take like 30 seconds, kind of go through a little bit about my bio. I've kind of had a more of a non-traditional kind of background. Really started out in the Army as a psychological operations specialist. I told people that's how I kind of got into marketing, then kind of did 20 years of corporate marketing. And really last few years, really been focusing on the family portfolio, which was really more single family properties in California, Washington, Nevada, and starting to diversify into multifamily, specifically in Dallas, Texas.
Okay. And so the theme of the show is when real estate gets real. So there is this, I like to call this romantic idea of when you get into these larger multifamily deals, it's rainbows and unicorns, like, cool, I made it, which there is something that shifts for you. But what is it you would say changed for you after you got your first deal that you just weren't expecting?
I I think like I knew some of this kind of going in. I think you kind of have this, as you said, like romanticized like kind of view of what it is, and then there's like kind of like what it actually is right now. So I think for me it was really eye-opening that like multifamily is basically running a business. And then I think kind of looking at how we're running our multifamily properties as asset managers to then how I was running as a single family accidental landlord, I was like, oh, I was really not doing a very good job with tenant communications, with renewals, with tracking those different metrics, the P&Ls. So I think there's just a lot. It is a lot of work, like a standard 9 to 5 aspect of it. But then there's like curveballs that will hit you. Like I'll kind of use an example with the recent administration with a lot of their immigration policies. Our first property was a 76 unit in Irving, Texas, and a lot of our population is Latino Hispanic. And so I remember like last year, when I started ramping up in Dallas, we had like 7 skips in a week. And so that took our occupancy down from like a 90 to like 80s. And then it took a few months to kind of get back into the 90s. So.
Yeah, that is. So I was actually speaking with Neil Bawa, if you know who that is. I was speaking with him yesterday, and he said that it just, across the United States, just a huge impact on occupancy and even rent increases, because it just fundamentally it just takes demand away. And as an operator, I can tell you that I've seen the same thing. I'm familiar with the Dallas Metroplex, and it's been a bit challenging. So with that, now that you're an operator, you're responsible for your investors' money and the overall outcome. So how has your identity shifted from like, oh, I'm doing deals, to now all of a sudden you're in the trenches and you got this like, oh shit, how do I deal with this? And so how has that really shifted your relationship with your investors?
I think with our investors, like it really hasn't necessarily like shifted. I think we really want to make sure that we're good stewards. I think that is kind of one of our principles at Give Rise Capital, is to be a good steward of people's capital and our own capital, like believing like it's not necessarily ours, we're managing it. So we really kind of focus on making sure that we're upfront with the communications, we're transparent, we're always available. If an investor texts me, like I make it a rule that I get back to them like within an hour or two, right? So even if it's just, hey, I need to get back to my computer, I'll respond to your question, or if it's an email around that. So I think it doesn't necessarily haven't like fundamentally changed. I think my anxiety level, maybe my worry level has kind of gone up a little bit. I think as we were talking through earlier around like, rent growth has not necessarily been there in a lot of the like Sunbelt markets. And so that's definitely impacted what we're seeing from revenue and obviously from an NOI aspect. So definitely cash flow is one of those primary concerns that we're looking at this year, especially as we're seeing like A's are cannibalizing B's and then B's are cannibalizing C's. And our first 76 unit was a Class C, and then our second one was a Class A. So it's interesting kind of seeing the different vintages and how they're operating, especially in the different submarkets in Dallas. So
But you're primarily in the Dallas MSA.
yes, yeah, Dallas MSA.
Okay. So what you said Irving, and where's the other property located?
Richardson.
Richardson. I'm not familiar with where Richardson is at.
It's like a little bit north of like Garland. So it's like probably like it's not like you just like kind of start hitting like as you're trying to drive up north like to Frisco and Plano area,
Okay.
like
Okay.
Richardson's like there. So
Okay. All right. When did you all acquire those properties?
we acquired our first one, our 76 unit in September of 2024, and then our second one was July of 2025. So we're again also back in acquisition mode right now. So
Okay. All right. So it's interesting to hear you say that because a lot of folks have said there's no deals. Like the deal flow is non-existent. But you're here telling me you got into two deals. Um, what is your strategy that's really enabled that for you?
I think when people say like there's not like there is deal flow, I think for it really just depends on your specific like buy box, and I think that really just goes into how much equity can you raise. I think been talking to a lot of our different partners like the old Capital team down in Dallas, and then even
Hmm.
my wife was at an MHC. It's like the debt's there, and it's been there for a better part of probably last year and a half.
Hmm.
It's just whether you can raise the equity because I think there's been a lot of investors, like a lot of investors, even that I know that were personally burned. And then so now you're a little bit skittish. So I think we have the advantage of my wife and I didn't really start in multifamily until after that 21, 22. So
Hmm. Hmm.
really kind of taking advantage of kind of the distressed sellers that that basically have bridge loans maturing and the banks aren't doing the extend and pretend anymore. So
Yeah, yeah, that's for those of us that's been in a little bit longer, it's been tough, man. It's been a really
yes.
rough ride. Um, I can share some of those stories with you at another time. So I want to you mentioned can you raise the equity, right? With the capital raising.
Yeah.
And you got into it. So I'm inferring here, correct me, your investor pool is newer to this space, hasn't had to go through this cycle. Is that correct?
For my wife's and mine, like for the most part, yes. And we're more like it's more Asian American, more Bay Area, so more tech money like within
Okay.
there. So
Okay.
but definitely a lot of California investors. So whether like we're selling assets here and then trying to migrate over to a different geographic location in the US, that's kind of been primarily most of their strategies. So
Okay. And you all are doing the primary capital raising for these deals, or you have other partners you're bringing in?
we have other partners too. I think my wife and I like to because we're both kind of doing this together. And I think there's a reason why I kind of left the W-2 job. I think kind of just take a quick detour. When my wife was pregnant with our first one, about 6 months, like I was at my CMO position, and then my boss basically kind of forced me to go before my paternity leave started, and that kind of sucked. And so I
Yeah.
think I had this conversation. I went through like a period 2024 trying to figure out like do I focus on real estate? Do I kind of go back to kind of the job market W-2 life? I remember I had a conversation with someone and it was Kip Knight, a former CMO from Taco Bell, and he basically said, "You're just basically trading your time for money." And at this point, like we already had a lot of family assets, so part of the reason why like we're not just doing the capital raising, but also the asset management and the operations, the underwriting of basically the entire stack of it is because there's two of us. And I think it allows us to get there a little bit quicker. So
When with the capital raising, you're saying Bay Area. So I'm in California as well. I'm in Central California.
Yeah.
So I get it. I don't invest here. I'm all out of state investing. What have you what have you learned about capital raising that, and I'll frame it up this way. I chat with a
Mhm,
lot of people who are like, find the right deal and the money will come. And
mhm.
then they come back and say, I've got a deal, I can't find the money. So what have you learned about capital raising and what have been some of your biggest struggles when it comes to that?
I think like two things, right? So I think for me, I have 20 years of corporate marketing experience. And so, that's working hand in hand, marketing and sales, but capital raising is basically it's marketing and sales. That's essentially what it is. Like you're trying to create like a funnel. There's your ideal investor avatar. Like you need to build a CRM, you need to have technology.
Hmm.
So I'm now actually teaching members of our community like about how to look at capital raising, like using marketing and sales like frameworks. I think for me, the difficulty and the area that my wife is much better at it is really the relationship aspect. And I would say that definitely do not wait until you get a deal to start like building those relationships because
Sure.
it's usually definitely too late at that point because everyone's going to move at a different pace. And so like you can have some investors that will go through it very quickly, some people that will lurk, some people that will just like maybe have cold feet. We've kind of had like the full gamut in terms of like the two deals that we've raised so far.
Now that you've been in the space for a little while, what's been the hardest lesson you've learned now that you're a GP, a general partner?
Oh, that's a good question. I think cash is king is like that phrase has really been kind of sticking to me a little bit. I think now that I can kind of see how I guess what the entire financial plumbing of here's how the money comes in from the residents and tenants, here's what's going to OpEx, and then there's CapEx, and then here's what you originally raised, here's what you had set out for your different budgets. Like I'm starting to understand like the pressure that operators were under when they were having bridge loans. They had like
Hmm.
interest rates that started to kind of rise, and then eventually, like they just weren't able to pay back their debt service because it ends up being, do I pay my lender? Do I pay like this vendor? Do I pay like you just run out of money? And so I think that's kind of the biggest eye opening is just being more intentional. So I think definitely been creating more financial like just spreadsheets to kind of track everything as it goes through. Like we're like we use Resman for our property management software, but then like
Hmm.
how do you be able to see some of that in different in different perspectives? So looking at it from capex, opex, the financial projections, budgeting for following years, etc. So
Yeah, absolutely. So as you're talking about cash is king and the variable rate thing, I can tell you, right. So you've got to manage all the money, but when your mortgage payments like triple, and you're like, whoa, like what do I do here? And so the story is real. Who do you pay? I gotta keep the employees at the property running the property. I gotta keep the vendors coming back. I gotta keep the lender happy. Never, never, never an easy decision. Um, but I think that's very insightful of you. Because when I was first underwriting deals, and in your role, have you underwritten deals, or has your role primarily been focused on like capital raising, asset management side?
yeah, I also underwrite the deals.
Okay.
Like I'm more kind of back of house. My wife is more front of house, and
Okay.
so I do all the finances and underwriting, like numbers, and I get along a little bit more. So
Gotcha. So like for me, when I was first underwriting deals, I mean, I didn't know what I didn't know, but I knew the theory of underwriting
yeah,
deals. And then there's like the first few months of you're like, oh shit, man, like this plan is not unfolding the way I thought it was going to. I had this idea. Has that impacted how you underwrite now as you're looking at deals now that you know what it's like to actually have a property?
it does. I think like investor distributions like kind of come top of mind. Like I think last year one of my lessons was like maybe I could have held back a little bit more on the investor distributions. That way
Hmm.
it's a little bit more even on a quarterly aspect instead of now like we're having to kind of just dial it back a little bit and then I have to tell investors, communicate that this is what we're doing. And so it's it again, I think for me it was like it was a learning lesson there too. It's like I like as you said, I understand all these things like practically, it all makes sense, but until you kind of have that real world experience of it, you kind of get punched in the face a little bit. You kind of like, oh, this is why you should do this. This is why there's a rule of thumb for this. Like I think
Mhm.
one of our partners slash mentors, Tony Lin, like he has a lot of like rules of thumbs on this is what we should do, but it's based off of his years of experience. I don't have those years of experience, so now I've just been trying to come up with more equations, more formulas to help me kind of get to that same point. So
Yeah, yeah, you don't know. You kind of gotta earn some of those battle scars, so you can bake all that stuff in. So you mentioned you're using Resman, which is a great software tool that probably also means you're working with by the size of the properties, property management companies, right? So you're now a business owner responsible for people's money, but you're also responsible for leading a property management company. Um, how has your background helped you with that experience of leading a property management company?
I think like because I've led bigger teams like in the past, like on the marketing side, it's really the same principles of leadership like kind of are applicable. And I think really it just depends on how you want to kind of be able to lead, right? So I think when I look at it, I always like to try to understand what's the pain point of our property manager or our leasing agent or and try to really uncover like what's the not necessarily the symptom, but like what's the root cause of it. So that's how like I try to be a little bit more empathetic that way, and then kind of break it down to create more systems and processes that we can all leverage. Because I think the best project management tool is the one that people actually use. So you can create the best one, but no one uses it, doesn't really matter. So.
Is there a project management tool that you favor?
Um, I think this is kind of where it's like because I have different partners, like it really kind of goes into like what does everyone use. So right now we just kind of keep it more simple, just use like Google Sheets. Like
Okay.
I personally use for my wife and myself, like we use Notion or Slack. Obviously, use all the different AI models now to help be more efficient with our workload. So.
So one of the tools I got turned on to by my partners is Monday.com.
Mm.
And so I don't know if have you used that one before?
I have in a past life, yes.
Yeah, it's very, very, very flexible, which is good and bad. It's good because if you know how to use it, it's very flexible and you can turn it into the exact tool you want. If you don't know how to use it, it can be overwhelming because you have way too many switches and knobs you can turn to build out your project plan. But to your point, just a simple task list is goes a long way. Um, what is an unforeseen challenge that you've had with property management? I'm not talking poo-poo on property management, right? But what
Sure,
is an
yeah.
unforeseen challenge that you've had when it comes to property management being involved?
I think with us, because we're leveraging a third party, it's someone else's business, right? So it's like I can only influence it so much as a client. I will say like our property management company, Centra does a lot of great things. For us, I think they are a little bit more old school. And so I think that goes into the people that are handling some of our various functions, like marketing would be a good example. It's like, is this how I would do the marketing for our properties? So I think for me, it's been trying to like better understand property management versus asset management. And these are the roles that the ownership plays, and this is the roles that we hire the property management company to actually do for us. And what's too much micromanaging or too little micromanaging. Because I kind of think that of that as a tool, right? So I'll kind of use a good example, like when we had those skips that happened like last year when
Hmm.
our occupancy started to kind of like dipping down, like we had some challenges with just kind of basic communication. And the easiest thing that we had our property manager, who happened to also be new at that time, implement was just literally giving us a status update at the end of the day. Is like, this is how many people like came through the door. This is how many people submitted applications. This is how many people like walked the units. And like for us, like that was really helpful to just make sure we're on the same page. So
Yeah. So KPI tracking, right?
Yeah.
Yep. Yeah. So you probably have like dialed in your KPIs. Was another thing I found very, very
Yes.
effective. For someone who's listening, there's this like new wave of people coming in who
Mhm.
are out there with the hopes and aspirations of finding a deal. What's one thing you wish you knew when you were first getting started that would help you get across the finish line faster?
Oh, that's by one thing. Since we talked about capital, I think what I have seen personally within my community and also from our experiences, like you usually tend to have two types of people if it's their first time capital raising. Either someone that does not have any belief that they can actually do this. They'll raise $0. And then you have like the person that thinks they can raise like millions of dollars, even though they've never done that before. So I think my advice would be just kind of follow the basics of it, meaning that if you want to be committed to actually doing this, like understand like why you're trying to do it. Like for me, it's simple. Like I will go hell and back because I'm doing this for my kids, right? So like me being able to operate this, like because I'm not doing a W-2, like how I get paid is, yeah, the asset management fee pays a little bit, but it's really the acquisition fee, right? So like finding new properties like is helpful. It's also like we're trying to diversify some of our capital, from single family
Hmm.
into multifamily. So I want to get the tax breaks. I also need to put it somewhere else. I also want to have control over it. So like understanding like why you're doing it besides just, oh, like I'm just want to have like a side gig or like this is like a side job. Like I don't believe that you can be I mean maybe you can be, but I don't think you can be a good operator just doing it on the side. Like I think this has to be what you do full time. So.
Yeah, you got to be pretty dedicated. I agree with that. So you mentioned capital, putting the time and effort, energy into that. And I also want to go back to something you said, which is, you need to start raising capital well before you have a deal.
Mhm.
You have a marketing background, and I don't know if you've just tapped into your existing network or if you started finding people outside of your network, but what have you found from a timeline from the first time you introduce somebody to
Mhm.
this idea of passive investing to the time they might actually invest? Like, what does that cycle timeline look like for you?
I think it looks like more like months and years, to be honest. I think like my wife, as I said, like does a better job of that. Like she kind of put in the time and effort with like having her own podcast, like doing more content, and then now we're starting to kind of ramp up like together, both her and
Mhm.
myself. But really, what I've kind of discovered is like if people don't know that like what you're doing, then they're not going to ask the question. So I started like I've been posting more regularly on LinkedIn, and every like week or so, like I'll get someone that I haven't talked to for a few years. It's like I'm curious about the multifamily thing, or like, hey, I love like your posts around like family and real estate. Let's jump on a call and catch up, and that's really just how it starts. It's just really trying to create those connections, but maybe doing it more of a one to many approach rather than kind of like you single like have individual conversations here or there because again like I just don't have the time right now with two kids. So
Yeah, and your kids are little, so you really don't have the time. You're mentioning they're still in diapers, still taking naps. So this has helped you out a lot. Um, Closing thoughts here. How important is it for you to get in the right rooms and surround yourself with the right people?
I think it's everything. I think my wife and I wouldn't be where we're at right now with like two multifamily properties without someone opening the door for us and kind of, I guess, paying it backwards. So I think we kind of model the same mentality of like if someone wants to learn around what we're doing, like we're always willing to share our time and our wisdom as long as they're showing that they want to learn around it, right? So like making sure that they're doing follow-ups with us, etc. So I think for what I've learned, like relationships is basically the main thing. It's like that's how you get deals. That's how you be able to find investors. That's how you find referrals
Mhm.
from for future investors as well too. And so it's even like with lenders, with brokers, etc.
Yeah. William, I really appreciated having you on the show. Thank you so much for joining me today.
Absolutely. Thanks for having me.
Yeah, absolutely. And for those of you listening, I will see you in the next show.
You've been listening to When Real Estate Gets Real with Stephen Lee Thomas. If this episode resonated, hit that subscribe button and share it with another operator navigating the realities of the business. And if you've crossed your first deal and have lessons worth sharing, you can apply to be considered as a guest in the links below. Thanks for watching, and see you in the next episode.